Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday the 13th, so stay lucky today. We got a bit of economic news releases, as we had indicated earlier this week that today was the big day. We'll start off with the retail sales for the month of August. So we had a 0.4% improvement in the retail sales for July rather, and for the forecast for August it was 0.5, and it came at a lousy 0.2%. Now, if you strip up the big ticket items, it was like auto. We had 0.6% growth in July, and August forecast was at 0.3, and it came at, again, very low at 0.1. Now, one thing to note, we had disappointing numbers in August. The previous 2 months were actually revised higher, so a little bit higher on the July and June numbers to kind of offset things. Now, we also have the producer price index. This is the inflationary number on the wholesale level. Now, this has some importance, but not real important, primarily because they look primarily at the CPI as well as the PCE in terms of inflation, because that's on the consumer level, where even though sometimes the cost on the wholesale level is incurred, they don't always pass it off onto the consumer. So it's important to look at, but it's not always indicative that they're going to pass along to the consumer. So we had a 0% back in July. We had a 0.2 forecast, and it jumped up to 0.3. Now, when you strip out food and energy, you get the core. And so back in July we had a 0.1. The forecast was to remain at 0.1, and it came out very low at 0%. So basically, no inflation on the wholesale level. So inflation's been something the Fed's been watching. They do find it kind of a little concerning that it is extremely low, especially when there's stimulus packages that are out there, and that typically would raise the inflationary level. But right now we have not seen that. And last but not least, we got the consumer sentiment for the month of September. So we had an 82.1 rating or level in this index here for the month of for August, and the forecast was supposed to dip a little bit to 81.5, and it dropped dramatically down to 76.8. Now, this is something to keep an eye on, because if consumers aren't feeling well or don't think that things are going well, they could hold back on their spending. If they hold back on their spending, of course, the economy could go back into a recession. So this is something definitely high impact on the market, so you're definitely going to want to keep an eye on for future. So obviously we saw that in retail sales, if people aren't buying, what can happen. So let's go ahead and jump over to the headline news. Not much over there. It's just pretty much the stock market's mixed right now. The Dow is the only one that was up, whereas the NASDAQ and S&P 500 were down so far this morning. So we'll jump over to the bond market and see how interest rates are faring. So we're actually up from yesterday. We're up about 19 basis points from where we left off yesterday. So yesterday we did have a drop in the day, and so far this morning, it's pretty early in the morning, but it's so far it's up. We're kind of about where we were started the day yesterday. We're kind of reaching those levels where we start off about 25 basis points, probably higher. So this is something we're going to be pretty close to. Hopefully we can get up above the 99 level. It'd be kind of nice to see. But again, caution for all this, because as I indicated, next week is the Fed FOMC meeting. On Wednesday will be their announcement, so we'll have it Tuesday and Wednesday, and that will be extremely important, as many investors for the past few months thought September would be the month that they would tapering, but with the new recent economic data, they're kind of uncertain. So what could transpire? We could see money being pulled out of both equities and the bond market until we get reaction from the Fed before they start placing money. Now, on the bond market, it's been hit pretty hard. It's pretty much priced in there that maybe they will start their tapering. If the Fed comes in next week and says that they're going to hold off on tapering, we could see a little bit of a bounce back on the bond market, and then the equity markets as well. Something we gotta, if they do start tapering, they haven't priced in there. So if they do start tapering, they could go through a correction themselves. So that's something to watch out for as well. All right, I hope you guys enjoy your weekend. Thanks for watching, and again, stay lucky today, being Friday the 13th. We'll see you guys on Monday. Take care.